Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Chris Vermeulen. He is the founder and chief market strategist with thetechnicaltrader.com. And Chris, think about the last 100 days of trading. We go from the February 19th high to everyone talking about a depression all the way back to all-time highs in less than 100 days. I mean, it's quite remarkable to see, even where the Nasdaq-100 is at all-time highs over 10,000.
It is. It's mind blowing. It really is the ultimate roller coaster ride, and nobody really saw this coming. And who would have thought a pandemic and a market meltdown and a market recovery? I mean, it's just wild times. That's for sure.
Well, Chris, let's take a look at it from a technical standpoint, because you and I can argue the fundamentals all day long if this is overbought, if we think we're overextended. But when you take a look at price action, that's going to help you confirm your risk levels. What are you looking at now when you're taking a look at a chart like the NASDAQ, for example?
Yeah, well, I mean, there's a little bit of mixed signals out there. The Nasdaq obviously leading the way. It's tech heavy. It's making all-time highs. 4 days ago when it made an all-time high, it really took hold of the media. So it's getting so much media coverage. It seems everyone's piling into that sector in those stocks, and they're riding it up, and it's just driving the price higher. Yesterday, the stock market sold off in a big way. Nasdaq just bucked the trend and just kept on going higher and higher. And that just goes to show that everyone's really following the leaders. They're piling in, chasing that really the outperforming index.
Yeah, and it seems like it could be a win-win for the bulls if this rally has legs and it keeps on climbing. That's great for investors. If not, the Fed and policymakers will step in, but it doesn't even seem as if what's happening in the market even matters to policymakers. And in theory, it shouldn't. We just heard today, Wednesday, June 10th at 2 o'clock, that the Fed does not have the best outlook going forward. So it seems as if there's going to be plenty of stimulus around, at least for the near term.
Yeah, I agree. It's really tough. I mean, you can't buck the trend. You can't fight the markets and try and pick a top. I've been expecting a pullback. It feels frothy. The fundamentals don't make much sense. But really, the only way as traders and investors make money is if you're on the right side of the market, which you have to follow the trend, even if it doesn't make sense. And that's the hard trade right now. It's hard to pile on at these lofty prices. And if the Fed's there to support it, I mean, even if there is some big selling, we could see the Fed just step back in and support it. So how much risk is there to the downside if they're just going to be there with a safety net?
And what do you think about the bond market? That's another area that's still continuing to struggle, which could be why you're seeing investors pile into stocks. The yield it's better.
Yeah, there really aren't much yields there at all. But I mean, bond prices are staying up pretty high. And same with gold. They've been trading sideways for a few months. And that goes to show there's elevated fear in the market. So people are still holding on to those positions. Now, bonds have started to sell off in the last week or so, and they're picking up speed. And that to me is telling there's a bit of a crowded trade in the equities market. People are giving up on bonds. They're moving over to equities. And the way bonds is selling off is a lot like a bit of a panic kind of movement out of bonds, and it's a FOMO, a fear of missing out on stocks. So we're getting an extreme sentiment. I do feel like we're going to see choppy waters ahead for the stock market for potentially a week or two. It's a little overdone, but overall, I mean, you can't buck this trend, and the Fed just keeps feeding it money. So it's really, they're supporting the economies.
And to your point too, gold is continuing its move higher, at least it's holding those levels. So that also shows a little bit, there's global concern there and some fear moving forward. I mean, even if we isolate the move that the markets have had, we're still looking at COVID-19 cases. They're on a move higher. I mean, what does that mean when we get into the fall and into the winter, and then we have an election coming up, and we still have social issues that we're facing here as a nation as well. So not too much of a surprise to see gold holding up as well.
Yeah, I think gold's kind of one of those win-win situations as well. It's been moving up with the dollar for the last year. It's a fear trade. When people are afraid, they kind of buy gold. It's a global safe haven. It's not just for the US, it's other countries. People are buying it around the world. And if the Fed's going to keep doing stimulus, that's actually bullish for gold. The more they print, kind of the better it is for gold. So I think gold right now is a win-win as well.
All right, Chris, thanks so much for joining us on Trade Talks.
Thanks for having me, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.